Hello everyone, welcome to our NFP. Don't worry, I've seen some comments already that the live hasn't started. I'm here. Welcome everyone. Happy New Year. We haven't, this is the very first live, sorry. So I wish you a prosperous and healthy, first of all, year. So Happy New Year to everyone. This is the very first NFP of the year. So I look forward to see whether we're going to have any surprises or not. In the meantime, I will provide a quick preview of what we have, of what we have seen so far today, especially this week that all the markets are back after the long holidays, and where we are standing right now in regards to the markets. So in general, guys, because before I share my platform and see together in detail every single one of the major assets, of course, along with anything you want to ask, feel free. By the way, as usual, it's a live streaming. It's your session. You can ask anything you want. So what we have seen so far this week is treasuries and general the bond and stock market being under pressure. As we keep adding in our blog and in our social media, there was a lot of cautiousness ahead of the NFP report today, but also after the minutes that we have seen from the Fed on Tuesday, there was a pushback of any interest rate scenarios and interest rate cut scenarios from the Fed, something that has added pressure on the treasuries and the stock market as a consequence. So this remains the case so far today. European bonds and US treasuries are on the downside ahead of the data today. So we've seen bonds, for example, bearing part of the year-end rally that we have seen in 2023. And the same stands for the treasuries as well. The 10-year treasury yield was slightly higher, but still under pressure. So we are just 4 minutes away from the NFP number. So I should also share with you my dollar chart and of course the calendar, just to in order to see together any reaction. I'm gonna add the 15 minutes chart. I have a high Kenashi candles over here, which for the time being we can see that in the short term there is a pullback with sellers in control for the time being. Allow me also to share on the left hand side of my screen the calendar so we can monitor the release together. And at this point I can see a lot of interaction, a lot of commentary in regards to gold, in regards to dollar yen in the chart over here in YouTube channel. Gold, okay. North or south, where is it moving? Okay, nice. Oh, okay. So okay, we have the calendar as well. Here we are, ready. As you can see from the economic calendar, here we are. Expectations are for 170K new jobs and for December, after the nearly 200,000 we have seen in November. So expectations are still like signaling that there is a persistence for the US payrolls, for a quite solid, we could claim, US payrolls and general labor market. So this is what is expected in a bit, with a bit of a pullback, a slowdown on the average hourly earnings, which is the very second most important indicator for the labor market. And obviously, this report is significant for the Fed as well. And this is what matters today. Is not the actual number, but whether the numbers today, the reports today, will give us further further clues for Fed and whether they're gonna keep their interest rate unchanged and higher for longer for the very first half of the year or not, or we're gonna have an early interest rate cut. So let's wait and see. So in a bit. So yeah, as I said, hourly earnings and NFP are the two most important readings to monitor first, and especially after we have seen the initial claims tightening in December, right? And the continued claims elevated significantly in December. Okay, so dollar spike higher. You can see this this spike here, guys, 102.64. It keeps moving higher. There's a significant boost. And another positive surprise. Oh, Jesus Christ, that's a quite strong and solid report overall, even though I haven't checked the breakdown of it. But look at this. Let me zoom in a bit so you can keep an eye as well. So as you can see, 216,000 new jobs. So surprise to the upside. Interestingly, the November reading has revised lower from 199,000 to 173,000. Unemployment rate is in line with last month's reading, but it came below the forecast, so it missed the forecast. While average hourly earnings is on the upside, so that's definitely not. It's not what the Fed wanted. And this is not calling for a cooling of labor market. This is still indicates that it's a persistent, solid labor market in the US. So I'm afraid, guys, like very briefly, that this will mean that we indeed have a confirmed, we could say, pushback of interest rate cuts from the Fed. It won't have. Based at least on the NFP, it doesn't expect it to happen anytime soon. The interest rate cuts, so any easing of the policy. So that reminds me what Barkin said. The Fed member Barkin said back in Tuesday or Wednesday I'm not quite sure, but that they're gonna stay. He was the only one stating that they should keep interest rates high for longer, not proceeding with another interest rate hike, but at least keeping the interest rates high for longer, pushing back the scenario of an interest rate cut in March, pushing it further actually. So that means that we're gonna see an easing of a monetary policy. Possibly at the very end of the second quarter of the year, who knows? But for the time being, that's a pretty solid, for sure, a pretty solid labor market. So let me double check whether I have a breakout of this report yet regarding just to double check what actually supported this surprise, whether it was the private jobs or anything, the governmental employment or something. Let me check for the breakout, whether the breakout is out already. No, it's not. Okay, so obviously dollar has been supported after this this release, and that's quite a reasonable behavior and a reasonable performance buying pressure on dollar is quite reasonable. Consider what I just mentioned, that a solid or a persistently strong labor market indicates that we're not going to see any change in the monetary policy, any easing on the monetary policy anytime soon. So that's why there were some buyers on dollar, at least in the near term, after that report. So let me check a bit your that means that Francois joined me. Welcome, my dear. Yes, that could definitely potentially we could see some weakness in gold, and don't forget that in the near term at least, yes, there is a dollar support over here. So we should, let me just change it and turn back to the gold, and that has a significant breakout as well of this short-term support this week at 2030 has already broke that level and dip to 2024 territory. Let me check a bit. Yeah, okay, so we are a lot of gold traders over here, and you are absolutely right, Francois, absolutely right. So that's my near term, my very short term setup, in which you can clearly see over here that it has already broken my two support levels, the pivot points that we have from the pivot point analysis. So first and second support have been already breached and broken, and the very next one, it's down to 20. Let me just be precise. 2021 territory. So that takes us back to the beginning. Actually, it looks like the mid level from December's and January's performance. So if I just let me just simplify a bit this chart. So here we are, December's bottom, December's resistance, and just to measure a bit out of curiosity to see whether, yeah, nice, that's nice. That's a 4-hour chart, gold, okay, 4-hour chart, and look at that over here. It's at indeed is the mid, that level over here. So 2030, which has already breached and broken, is the mid of the range that we have seen in December and so far into this very first week of the year. So it has already, let me zoom in a bit so you can see it. Nice leg lower breaking that immediate support with next important support levels here, the 38.2 Fibonacci level, which also coincides with the mid of December support at 2017, and later on, of course, the 2000 territory, a key psychological support level for gold. So yes, absolutely. As Francois is saying, from a fundamental and technical perspective, it there is. I'm going to share your comment actually. I'm going to share your comment. Plus, from a technical perspective, there is a beautiful Bolivar squeeze breakdown. You are absolutely right. Yes, absolutely. And from a fundamental perspective, if you allow me, because the chances of a cat have been postponed, right? So this near-term scenario that we're gonna have at least for January and February, even in March, because the very first cut was expected in March. So the fact that the cut has been postponed indicates for that we're gonna keep that the Fed is gonna keep at least for the first quarter the rates steady. So that's also in line with the fundamental, with from a fundamental perspective as well. Fundamentally and technical perspective, there is support on dollar and a sell-off in gold as well. Okay, important, very important that right now is just to mention, since we are checking gold. Don't forget that gold is has been widely used as for hedging inflation. Next week we have the U.S. inflation coming out. I think it was that's on next Thursday. So that's why I keep saying the whole week that next week we're gonna have a clearer picture regarding the central banks, but of course where the world's economies are standing for the 2024. So NFP today and inflation next week, and actually we're gonna see inflation from several other countries such as China, other than US, China, Australia as well, Switzerland as well, Japan as well. So that's something that definitely by next week we're gonna have a clear indication regarding market trends based on the fundamentals as well and the economic indicators. So guys, we are here to reply to any questions that you have. So feel free to let me know what assets you want me to cover and which time frame as well. Why not? So since we have briefly checked gold, as stated, immediate support levels for the near term is the 2017 territory, and 2000 psychological level is the very next medium term support. If I zoom in a bit on the hourly chart, it's quite important to monitor at the top of the hour whether the candle will manage, whether this sell-off that we have seen after the data, here we are, whether this candle, this hourly candle, will manage to sustain these losses and close below this important support level. I'm referring to 2030, because if we have a confirmation of a close below 2030, that could open the doors, as we said, further to the downside for gold. Okay, so let's move on. Hi there, welcome everyone, happy new year. I'm afraid for the time being we don't offer these lives in French, but hopefully in the future. Okay. I'm afraid we don't provide any signals, but I'm here to help with anything you want in regards to a live analysis, fundamental one and technical one, for any asset that you want, dear GML. So bias, David, you're referring to bias for gold and dollar, I guess. So, okay, in the near term, gold momentum, gold bias is negative, and that, so and also in regards to the medium term and long term, okay, let's see as well. The asset remains in an upwards channel since October. That's gold in a daily chart. We have a pullback, as you can see, for 6 trading days in a row. But as long as the asset, the gold, doesn't break the 2000 territory and breaking this ascending channel over here, overall, in the long term and medium term, the gold remains positive. The gold bias remains positive. As long as I said, we don't see further sell-off, breaking the 2000 territory and extending below the 3 months channel. So negative bias in the near term intraday, okay, and the medium and long term one is still positive since it holds and keep trading in an upwards channel. But as long as we see the gold breaking 2000 territory and breaking and getting out of the channel, the 3 months channel, that could change the overall bias. Dollar yen. Daniel, yes, this is gold. We are still in gold. Hi, madam. Should I sell now or put gold because the price has started declining? Dear Henry, I'm afraid I cannot advise you what you should do or you shouldn't. How I can help you just state what I see and what the technicals and fundamentals present. So, as I mentioned earlier, if at the top of the hour, so if this hourly candle closes below 2030, that could indicate further pressure, that could attract further sellers, because as I said, 2030 is a very important support level. It was weak support, is the 38.2 Fibonacci level as well. So at the top of the hour, so in 15 minutes from now, if we see the candle closing below 2030, that could attract further selling pressure with the next immediate support level at, let me just, 2027 and the 2018, which is also the 38.2 Fibonacci level. Okay, because it's a range, as I mentioned earlier. Let me just the 4-hour chart and get rid of the long-term channel just to show you again what we discussed earlier. Maybe you didn't manage to, you just join us. So since, look at that, since the mid of November, gold has been in a range, so bouncing between 1970 up to 2070. So by plotting a Fibonacci level up in this 2 months range, we have seen that other that 2030, other than our immediate support level and the week's support level, is also the mid of this range. That's why that's why it's so important. So yeah, if at the top of the hour we have a decline and we can see the candle closing below 2030, this is something that could indicate further, as I said, further selling pressure for gold, with the next immediate support levels at 2027 and 2018. Okay, you can use your fractals to find any immediate support levels. You can use your pivot points. There are a lot of indicators over here that they could help you. So just new here. Don't worry, Nesem. Anyway, the live stays in our channel, either in YouTube or Facebook or LinkedIn or Twitter. So that stays. It's saved. So as soon as we are done with the live, you can have a look again. Thank you, Wave. Thank you very much. So I will move to the currency market, since I have seen earlier. Yes, it was Mahole asking for dollar yen. Dollar yen has been one of the key movers today. Actually, in general, this week, you can see that there was an impressive rebound this week, as the markets are back, the Japanese market also back, and it recovered actually nearly all the losses that we have seen in December, or at least the 90%, if you prefer, of the losses that we have seen in December in just 4 days. So we have a nice decisive rebound away from 140 lows up to nearly 146. So it's nearly, there's two pips lower, and they managed to break the 146 level yet. So why is that? It was of course the Fed minutes, but it's also the Japanese what's going on in Japan, what happened in Japan in the last few days. The earthquake, guys, along of course with the minutes of the Fed, from the Fed and the NFP today, they have just changed, and they have changed the odds of Bank of Japan having an early shift of its monetary policy. Okay, so there was supposed in the January meeting, the markets were expecting, and was expected is to see finally a shift in the policy from Bank of Japan. However, these incidents, the earthquake and also the Fed have faded the expectations for an early shift. That's why we have this yen weakness. So it's not so much of a dollar strength. It was mainly yen weakness over here that supported the dollar yen to the upside. So as you can see, it recovered all the losses that we have seen in December, and retesting it's halfway actually. It's halfway on these 2 months down leg that we have seen from 152 highs that we have seen in November. So it's a very, very important level to be closely monitored, especially because this is the last trading day of the week. So tonight at the closure, okay, it's very, very important to keep an eye and monitor whether the asset will manage to extend gains above 146. Okay, because if it fails to break that territory and we see a pullback, that will indicate that this is a short-lived rally. However, the body of these candles and this increasing bullish bias indicate that this is a pretty strong positive momentum over here in dollar yen. So let me just zoom in the 1 hour chart. Extending higher, full body candles, a bit of consolidation, another leg higher, and as you can see, the fact that we have very, very tiny tails at the bottom of this candle and no indication of a pullback suggests that now the 144 is a quite strong support level in the near term for dollar yen, with an increasing bias to the upside. So I'm going to check the 30 minutes candle as well. I'm going to add the immediate, sorry for that, the near term setup that I have as well. just to have a look what's going on in this. This is the 30 minutes chart, okay? Dollar yen 30 minutes chart. As you can see, managed after retesting several times the resistance of the day, managed to gap up higher, extending higher, and it managed to break the first resistance of the day. As you can see over here, we have a bullish as well, a bullish cross in this short-term stochastic indicator, implying that the buyers are trying to take the control of the asset, at least in the very short term. RSI also points further to the upside, indicating that this rally might still have further room to the upside. Okay, MACD is a bit flat, but that's just a neutral sign. So we have another 6 minutes until this candle closes, but the majority of the indicators here in the near term indicate that there is further room to the upside for dollar yen. So you have seen that also the short-term moving averages are bullishly cross. Bollinger's pointing to the upside. RSI still points higher. As I said, stochastic up bullishly cross. So that might indicate that there is further support for dollar yen. But in 5 minutes from now, we're gonna get a bit of a confirmation regarding the near term at least. So DAX, let's shift a bit to DAX. Something that Delon asked. In general, stock markets, as I said earlier, we've seen some significant moves this week from the stock market with some decisive corrections. So this is Dow Jones. I think that Dow Jones was the one that it was the least that it was the one that it didn't move significantly. Mainly, it was the tech sector that had heavily weighted on Nasdaq. So, okay, I'm gonna get back to Nasdaq in a bit. Delon wants me to focus on Dow Jones for now. So, as I mentioned, there was a bit of a pullback in these very first few days of the year. However, as you can clearly see, it's like a very clear trend, right? A very, very clear trend since October, okay? Since October. Nice, smooth upwards trend in Dow Jones in this medium-term chart. This is a daily chart. There is a bit of a pullback, but as you can see, the asset remains well above the 20 and 50 day moving average, right? And it holds an imminent support at 37,000 territory. There is a shift in the bias. RSI, for example, indicates that it started turning lower since the last week of December, and it extended below 70, which is the positive territory, below 70 so far this week, and pointing downwards. So there is an increasing negative bias. However, a change or a reversal signal for this long-term trend could be not confirmed, but it could be presented only if we see a move below the 37,000 territory. 37,000 territory, and a move below it could indicate a reversal signal. It could give a reversal signal in this long-term uptrend, dear Daniel, because you asked for Dow Jones. So very, very important to keep an eye, especially in the very next few days, on that level. But overall, in the long term, this is a weekly chart. Still some positive bias, but it might be the peak of the. It might be the. From a technical perspective, at least, it looks like it's the peak of the trend, but fundamental supports that this is expected to be a year in which the corporate sector, the stock and equity market in general will be supported. But as I keep saying, the fact that the interest rate cuts have been postponed might turn the stock market, at least in the very first quarter of the year, lower. It's quite simple, guys. Easing of policy supports stocks, adds pressure on dollar, and supports gold as well. However, interest rate hikes or higher for longer interest rates environment has a negative sentiment in stocks, okay, but supports the dollar, okay. So it's quite straightforward. Intraday now, that's the 1 hour chart. We have the hourly candle just closed, so we have seen a long tail, but it holds gain, so a long down tail, but as you can see, buyers managed to close higher, so it's back to 37,400 territory. So that indicates that there is some support over here. Let me check a bit also. So consolidation in the near term, I'm afraid, dear Daniel, consolidation from the Dow Jones, a quite steady sideways move over here for Dow Jones, considering that it failed to extend lower and it returned back to the range that it had been for 4 hours in a row. As I can see from the breakdown, by the way, of the NFP report, it's quite important that the participation rate has been declined. We have seen a relatively large drop in the participation rate, which is something that put downwards pressure, which is responsible for that downwards pressure that we have seen on the unemployment rate. Okay, so yeah, let's get back to the dollar. I'm curious to see. So similar to Dow Jones, it didn't manage to extend above the days fractal, as you can see, above the 102.50 territory. So struggled to extend higher and return back to the range of the day. Dollar yen hold gains, remains above the resistance of the day. That bullish bias that we have seen from stochastic indeed has been proven correct. So stochastic keep rising, stochastic lines keep rising. So there is further room to the upside, or at least some or at least to hold this support for the time being. Let me shift. It might be too early, guys, but there's a lot of fear. This is what I can say over here. There's a lot of fear, a lot of cautiousness. Gold failed to break the 2030 territory, return some losses, and it's back to 2043 territory, trying to break the pivot point of the day. Let me check the calendar again. Okay, here we are. We'll still have in an hour the factors in the ISM services. So gold reverse the losses that we have seen. So as I can see from the Fed Fund futures, the March contract right now indicates 14 points in interest rate cuts. It used to be 25 at the end of the year of 2023. So, so that performance, the fact that they have the markets have quickly reverted their performance, suggest that now the markets are quite reluctant, are quite cautious ahead of the inflation next week, because this the data today, okay, just it could likely indicate a less dovish Fed view. Plus, it turns the attention to the inflation reading, because today's solid number out of jobs could show a persistently high inflation. So we could see the inflation to hold quite steady and not seeing a cooling next week. Yeah, so there might be some hedging against inflation over here in the gold, and that's why we have seen this change that is quite the opposite of today's reading. Let me check the chart. Okay, so thank you everyone. Guys, this is your session. If there are any further assets that you want me to cover, please stick it on the comment section, either on Facebook or LinkedIn or YouTube, in order to cover it today. By the way, just until I got any further questions, okay, I wanted to cover a bit why I'm using Heiken Ashi in this dollar index over here, and why it's quite useful, especially because I have seen that a lot of you are near-term traders, short-term traders. So as I'm not sure how many of you have ever used Heiken Ashi, but Heiken Ashi, it filters out all this market noise that there is, especially if we have any data coming out, such as NFP, for example. And it's a nice indicator, because it gives you a straightforward view of the momentum as well. Why is that? Because why is so straightforward? Because if there are no tails, okay, at the bottom of the candle, that is clearly stating bullish bias. While there is no tail at the top of the candle, such as the current candlestick, it gives you indication that there is an imminent selling pressure. Okay, so it's very straightforward, and it's just for if there are people here, I assume there are a lot of you trading in a tight time frame, such as 30 minutes chart, 1 hour chart, or even 15 minutes chart, etc. High energy is quite useful. It's quite useful for the short term, for such a tight and short term time frames. Yeah, exactly, because it smooths out, as I said, a bit the price action and filters out the market noise. So over here we can clearly see that that was just a noise, and now the sellers are back in control at this very last day of the week and ahead of the inflation next week. So yeah, so already broken. This is Nasdaq, guys. Already broken this immediate support level in this 15 minutes chart. So later on, 102.20 or even 102 level at the very next support level, the levels for the rest of the day for dollar index. Also RSI shifted back below 50, supporting this pullback, actually the continuation to the downside that we have seen since the beginning of the European session. So if there are no further questions, and that was pretty much it. You wanted only gold, dollar, Dow, and dollar yen. I'm gonna call it a date. Please have in mind that we still have ISM services in less than an hour. However, this hotter than expected jobs report, they have for sure unwinded the rate cut bets, but this pullback we have seen, it shows that markets are already turning their attention to the inflation next week, ignoring a bit today's reading and what today's jobs report indicates regarding inflation and regarding the Fed as well. So yeah, there is sorry, there is a near-term pressure, even though that doesn't change that for 5 days in a row dollar has been to the upside. So we might see the dollar holding these gains, as this holding these gains today on the less dovish Fed view, as I already mentioned. So important in the near term is the 102 territory, 102 bottom. Why? For next week, okay, guys, we need to keep an eye on 102.50, which is the next key resistance level, because a break of that level could turn the attention back to November's and December's high, which is the 104.20 territory. In the meantime, as I said, 102 could indicate a break, and a return below 102 could suggest the continuation of this 3 months downwards movement, and it could open the doors again to the 101 or even 100 territory. So very, very briefly, Wall Street is lower. Wall Street is lower. Dollar spiked back, but it quickly reverted some gains. So we might see further downwards pressure in the near term. Gold holds gains above 2030. There is some sideways expectations for the rest of the day for gold, bouncing between the first support and the pivot point of the day. And that's pretty much it. So, okay, oil, one more. Okay, it's Ezekiel. Let's finish with oil then. So, as we have seen the whole week, oil has been supported by, that actually has been well supported this very first week of the year. Is the supply disruptions and all the events that, and all these incidents that we have seen in Middle East. So the fact that all these concerns around the supply disruption is what it provides a nice support on oil. The oil managed to rebound away from the 69 territory and is back on the $73, $73.60 level, which used to be a nice support level back in November. And actually, a bit, yeah. So that's okay. That's the daily chart, and the fact and the reason why I'm presenting this is because this gray area over here used to be a strong resistance level back in the second quarter of 2023, okay, and which was broken eventually in the last quarter of 2023, and now the asset tries to extend, usually trying to break it and return above it. So it's a crucial resistance level in the long term for oil. However, we need to see how the week how the oil will end the week. However, still in the near term, we have seen a range, right? We've seen a range because since for 1, 2, 3 weeks in a row, oil is bouncing between $70 up to $76. So a move at the 4-hour chart, you see over here, other than a key resistance area for nearly 8 months now, more than 8 months. It is also a near-term resistance. So that territory, let me be precise. Okay, here we are. That territory, it has been retested several times this week, but oil failed to break that level. So I'm referring to the 73.70 level. So if we see oil extending above 73.70, that could open the doors to the ceiling of months range, which is the 70, let me be precise, should be 75.80 level. Okay, 75.80 level, which also coincides with the 100 Fibonacci extension. Okay, move and break of week's highs could open the doors further to the upside and to the 75 and 75.80 territory, while a failure today to break that level could indicate further sideways movement with the asset bouncing between the 73 and 71 territory. Okay, guys, so as long as we keep seeing these disruptions and further headlines regarding disruptions in the Middle East, oil expected to extend further to the upside. So yeah, that was pretty much it. Let me check for it. Thank you very much for attending. Hopefully you find this session helpful. Feedback, we appreciate any feedback. regarding something that you want us to change, or anything that you believe it will be useful, let us know. So that was the end of the session. Have a great day ahead. Have a great weekend ahead. Take care and see you again next week. See you. Bye-bye.